The first question I'd like to kick us off with is, in your experience, how have you seen politics play a role in property insurance issues in the many states in which you've worked? And maybe you can provide some specific examples for us.
Thanks, Beth. Good morning, everyone. And she had to use the kickoff reference with my foot being the way it is, didn't she? Good morning, everyone. I have the pleasure of running around the country, much to my chagrin sometimes, representing the insurance industry on any number of issues. And so I get to see firsthand, the best and the worst sometimes of ideas, and how politics intersects with this business is interesting. From the insurance industry company perspective, that's kind of the view that I'll bring to this today. And also as a guy that used to run political campaigns for a living, I kind of have a different perspective. My view is that, generally speaking, when politics and the insurance industry issues meet, the industry almost never wins. There is virtually no upside for a political person running for office to run for office saying, look at all the great stuff I did on producer licensing reform, right? I mean, nobody ever ran around a district talking about the need to reform market conduct exams for insurance companies. But on the other hand, where we do see this intersection, and again, it's almost always negative for the industry, it doesn't happen everywhere, it certainly has happened where we're sitting and has happened in other states, is when rates get involved in politics. That's always the issue that comes up, right? It always comes back to the price of this product. And this is where the industry, has almost no high ground, right? I mean, nobody, again, is going to rally behind somebody to say, my insurance rates are exactly right. And so it's very difficult from an industry perspective. We're almost always better off when these issues don't come up in political debates or as part of a political campaign. It's almost the worst thing the industry could imagine when somebody is running for governor and the second thing they talk about is insurance rates. And so that, that's just sort of the premise that I've learned in 15 years of doing this job, that if that's where we're starting from, that insurance issues are part of a political dynamic in a state, I would bet most of my mortgage that it's going to end badly for the insurance industry, at least in the short run. And then we spend all of our time, over the next however many years trying to undo things that were done originally. And so that's the dynamic. And we see it in Florida, we've seen it in Texas, we've seen it in California. We see it, and it's not just the rate issue necessarily. We see it in the aftermath of catastrophes. And so there are lots of examples around the country. But what's interesting is that in most places around the country, it's not part of the political dynamic in the state. Most of the time, these issues there really isn't a partisan, again, there's not a Republican and Democrat view of, producer licensing reform. And so there's, most of the time these issues are not particularly partisan, and that's good. If we can keep it that way as an industry, that ought to be what we try to do, as far as I'm concerned. So that's just kind of my general theme to sort of set the table. I know the others have got a lot of experience in this. Eleanor certainly does, and the Congressman does too, coming from states that have had lots of examples of where politics and this industry have met.
Thank you, Neil. Commissioner.
I would certainly agree, generally with Neil that when politics and insurance, intersect, it's the insurance industry has a big challenge on its hands, and it's a difficult issue to explain generally. And then you put it sort of into a political context and into the world of sound bites, and it just really doesn't, lend itself to that. I mean, these are, complex issues, and when you get into sort of the legislative, process, and Congressman, you can speak to this better than I can. I mean, the last thing you want to hear from is you want to hear from a bunch of actuaries, and when you start, talking about the complexity of the issues, and it's a lot easier to talk about some of the other aspects of it, and to try to frankly, a lot of what happens is you're trying to avoid the difficult aspects of it, and so you focus on other things that make for better sound bites and, make for, better politics. Neil, I was thinking about when you were talking about the rating issue, and no one ever says, my rates are just right. Everybody always wants lower rates. And, one of the problems with insurance is when you pay for it, you don't walk out of there with anything tangible. You don't have a new television, you don't have, a new pair of shoes, so you always feel like you're paying too much because you haven't gotten anything, right at that minute. But actually, you may remember about 20 years ago in Louisiana, when there were several commissioners had ended up going to prison. Several companies were their entire domestic industry was insolvent, and companies were being put into receivership right and left. People were getting into automobile accidents with people who had no insurance or had an insolvent insurance company. The Louisiana Rating Commission was actually telling companies that they were not asking for enough rate. I've seen it one time. It didn't last long, but they did. The other thing that is kind of interesting, because no one likes the insurance industry. The insurance industry is doesn't have a lot of friends, so I think that one of the things that's really kind of interesting and kind of funny out of the whole Obamacare debate is that the president has actually managed to do something for the insurance industry that they've never been able to do for themselves, and that is you have people saying, "I like my insurance." When I was preparing for this and thinking about this, and in one of our calls, I said to Beth, Beth, maybe we need to clarify what we mean when we say, the politics of property insurance. What does that really mean? And I think we all have a sense, or we think we know what we mean by it, and we mean that. I think most people in this room would probably say that that the political process perhaps makes doing the right thing difficult. We know what the right thing is from a policy standpoint or from an actuarial standpoint, from a business standpoint, but that the politics make it difficult. And because politics is the act of influencing action, by government or by groups of people on other people, and so if you kind of play that out, it means you're trying to influence action in a way that benefits you or benefits your constituents, sometimes to the detriment of others. And so, and in this context, we've got the issue always is rate. It's the focus is primarily on the rate, and the things such as sound underwriting principles, underwriting for risk, pricing for risk. Higher risk is going to pay a higher rate. Things that everybody accepts as just a given in any other context, until it comes to this issue, and perhaps it's because it is you are talking about pretty high premiums, and in a state like Florida, it's something that affects a lot of people. In other states, and having been a commissioner in 2 coastal states, one small, one large, one I think sort of better managed than the other, you have much more of an issue of the us versus them, coastal versus inland. Not quite as much as, you don't have it quite as much as you do, say, like in Texas, where, you have a huge, coastal insurance area, but the state is so big that it's less than 10% of the state. So a lot of people, in the rest of the state just don't feel like it's an issue that affects them or that should affect them. In fact, a little fun fact for you, there are people in Texas, in El Paso, Texas, you live closer to the coast of California than you do to the coast of Texas. And frankly, the coast of Texas, or the coast of California is a much nicer beach than Texas beaches. And so you have a lot of people, in the state who've never been to a beach, in Texas. So they're just, not not invested in it. So then you get into all of these issues, for the people on the coast who are who have a vested interest in keeping their rates, as low as possible, coming up with all sorts of reasons about why their rates shouldn't be higher, and wanting to sort of ignore what you would consider sort of sound insurance, actuarial practices, and so I think that's where sort of the politics comes in, and frankly, my observation is that for elected officials, it's a lot easier to sort of bash the insurance industry than it is to try to educate consumers or constituents or as to what's really going on. And I've been involved in these issues, like I say, in 2 states, and I've done a lot of sort of town hall type meetings, and people always start out saying, well, we just really want to understand what's going on here and why this is. Maybe, if we just understand, it'll be easier to accept. I don't think that's true. Because even once they understand, it still doesn't matter. The rate's too high. Who's the guy in New York that ran for mayor? The rent's too damn high.
Right.
Right. That's just. And I think that probably applies here as well.
Congressman?
Well, fundamentally, I want to get elected, and my colleagues want to get elected and reelected. So, politics will always play a role in the insurance industry. I think the best example, or the worst example, probably a better way to refer to it, is what happened in 2007 at the end of the special session of the legislature, when then Governor Charlie Crist thanked the members of the legislature for voting for his insurance bill because, as he put it put the last nail in the coffin of the insurance industry in Florida. And I think that as long as we can affect your rates as consumers, that we're going to want to be involved. And when you have disasters that occur that have not been properly pre-funded, and post-event funding now becomes necessary, and the only way that ever comes into play is with government being involved, and nobody's going to show that they're not compassionate, and we will spend whatever's necessary to alleviate all the concerns without any method and manner of those dollars. So, my experience was that I thought the state of Florida was an example of how badly politics has become involved in the insurance market, and then I had the opportunity to serve in the United States Congress, and I now see that the federal government is probably the worst example by far, especially in light of health insurance. And so, is it going to continue? Of course it's going to continue. It's probably going to get worse. It is a cultural problem that we have in this country. It is because we have allowed people to think that insurance rates are a function of government instead of a function of markets. And we've got to come back to educating people and educating our businesses that the necessities they have to have and making sure that their risk is covered is a result of competitive markets, not a government trying to be all to end all. And that is a cultural problem that we've seen to have come about probably over the last 25 years. So in short, we will continue to see it happen. I'm thankful for programs like this because we've got to do all we can to regain our image back that insurance is a necessary commodity. As my colleagues up here say, nobody ever goes and brags about their insurance policy. Insurance works best when you don't need it. But when you need it, thank God you got it, because otherwise it would come from us, the taxpayers. So.
Neil, you mentioned, since you cover 50-state territory, that there are some states where politics plays no role at all in property insurance. Can you elaborate a little bit on that?
Yeah, well, and that's probably in most states. There get to be controversies in states about individual issues, of course, but never, it's pretty rare if you just have the perspective of the whole country for the issues that played out here in Florida in 2007 to be mimicked in Iowa. That just wouldn't, that dynamic wouldn't be the case. The part of that is there's certain states with unique problems from an insurance industry perspective that are hard to get over. One of them is a great big coastline where the hurricanes go, right? That's just a fundamental issue in Florida and other states that are you just can't change. And so that sort of builds in a level of controversy that you just don't see in other places. And I do think, part of it is too, it gets back, I think, fundamentally to this issue of, people don't know what they're buying. You know, nobody knows when they buy their homeowner's insurance policy that they're just buying a risk transfer mechanism for a certain period of time, right? They think that they're buying whatever the policy limits are, depending on how bad the calamity is that affects their house. And we have this problem as an industry that we can't seem to break through that literacy issue of what people are buying. I always tell people, okay, here's the fundamental elementary thing. You own your house, and I own my house. How much would you charge me for 1 year if you were going to pay for every single problem that would happen to my house as an individual? Well, I mean, their rates, you know, it's never $750 a year, right? Or whatever the insurance industry premium is. I would do it for, you know, $50,000 a year. I'd take that bet, right? And that's insurance. That's, you know, when people talk about it that way, they understand it in a different manner. But we don't ever have that dialogue, it seems like, as an industry with people. And so I think if we get over ever that hurdle, and the notion that in some places, like here, you may not want to hear, I mean, I know nobody wants to hear this, but insurance ought to be expensive in Florida, right? It ought to be expensive on the Texas coast. It ought to be really expensive where the most risk is. And it probably shouldn't be as expensive. When you live in Iowa and you buy the house, your retirement home in Fort Myers, it shouldn't be $100 more a year to insure the place in Fort Myers than it was in Des Moines. And people just don't, consumers just don't make that connection at all. And the industry, I don't think, does much to connect those dots for people either. It seems like there's two kind of disconnects that go on there.
Commissioner?
You know, insurance is a difficult product to sell. I mean, most people, you know, you get people who buy it because they have to, you know, all the way, and only buy it because they have to. If they didn't have to, they wouldn't buy it at all. And then, you know, people who really are buying, you know, to manage risk and give a little more thought to it. But very few people, when you're selling an insurance policy to them, and I know this because I've sat across the table, you know, doing this, and you know, in one of my prior lives, and it varies from 30 seconds to probably a maximum of 3 minutes before eyes glaze over, and you just are limited in how much education you're really going to be able to do. And again, part of it is when people at the time they buy the policy, they don't think they're ever going to need it. So they really don't want to invest the time, up front. And then, of course, when the time comes when they need it, then you didn't tell them, what it really covered and what it didn't cover, and those sorts of things. It's interesting too, though, and one of the things I found one of the biggest challenges with property insurance, and particularly, the hurricane risk. This was true in South Carolina, also, in Texas, probably not so much here in Florida, but in South Carolina and Texas, you'd have people who say, I've never had a claim. I don't understand why my premiums are so high, why they keep going up. I've never had a claim, I've never had a loss. And, so it gets back to, that people don't understand, how, particularly for property insurance and catastrophic risk, how, your sort of behavior, unlike other kinds of insurance, isn't really relevant. It's not like your driving record. It's not like whether you're a smoker, whether you're overweight. It's strictly, sort of where you live. And then also, this mentality that, people feel like they're not getting a good return on their investment. That insurance is like an investment, and they're not getting anything, for it. And a friend of mine had what I think is the best response for that. And he's like, do you get really mad every year that you don't need your life insurance? And that, so, I think that this is, that, in states where you have, like the hurricane risk. Texas, you have the big hail risk. There's a lot of catastrophic risk. Politics is always going to be, there's going to be more of a political aspect to it than in some other states, because there's just a lot. There's a lot at stake, and it does make it difficult to do a lot of the things that need to be done. And as Congressman Ross said, it has really, we've gotten so far away from anything resembling a free market, when it comes to insurance. And insurance is a nonpartisan, bipartisan, issue. It doesn't matter. That even people who are, claim to be, strong free market, capitalists, when somehow they convince themselves that when it comes to insurance, that's just different, and that the same, that the rules, don't apply, and that. I mean, where else do you hear about like managing competition? That's just almost laughable. But it's true. There are some states where they talk about, the need to manage, competition, and this notion that you need to have government involved, that somehow government is going to facilitate, a competitive market. And that you're going to, unleash all these market forces because of something that government has done, instead of understanding that it's really, if government would just stop doing a lot of things, that markets could work, much better. This notion that, that a government initiative of some sort somehow is going to reduce. They'll say they're going to reduce costs. This is going on in the healthcare debate. They're going to reduce costs. Government can't reduce cost. They can suppress rates, but the cost is going to be what the cost is. And the market and, all of us are going to be the ones, that determine, what that is. But in the political process in the political context, it's laughable to use a term like free market, because we've come so far, away from that, and also the notion. I mean, if you're really a free market capitalist, I mean, that, and I think it's well documented that there's tons of capital available right now, that would be willing to insure risk. Now, the reason there are people who have all that capital is because they're not stupid. And they are not going to put it at risk, for less than what they consider an adequate rate or return on that. But there, there's a lot of competition for that. And so with as much capital as out there and as many people that are looking at this, I mean, if there's anyone that saw any opportunity to make some profit by doing something a little bit differently or for a little bit less than everyone else, they would do it. And we trust that in almost every other context, but we refuse to to let that happen in the insurance context.
Congressman, as you know, one of the big challenges we're facing today has to do with the National Flood Insurance Program.
Right.
Can you give us some insight on how politics has played a role in developing sound policy for that program?
Well, there hasn't been sound policy for that program. It's an example of a single-payer system that's very frightening. And I will tell you, just coming back yesterday, yesterday we had our financial services retreat, and we talked about some of the major legislation that we're going to try to push through. Flood insurance is at the top of the list. And the Biggert-Waters bill that I supported that became law 2 years ago required that actuarial adequacy be used as assessing the rates in flood insurance. Unfortunately, it became sticker shock as we got towards implementation. Some of you all are very familiar with this. And now politically, as we've talked about, my friends in the Northeast that sustained damage from Hurricane Sandy, my friends in the Mississippi Delta regions and in areas where they're prone to flood have all come back and said, we can't do this now. It's just not right. The fact remains that probably 20% of the people that are consumers under the NFIP are being affected by this in terms of rates, 80% are not. But the 20% has become very loud. And so it appears as though in the next 3 weeks we will go back to the State of the Union on January 28th, and then we will come back again. We won't take up much legislative business at all during that period of time. But the first week in February, we will come back and take up a patch, if you will, to the Bigger Waters implementation. And I can tell you that the Speaker has said, just as of yesterday, my chairman, Jeb Henserling, from Texas, great guy, has also said that we're not going to violate our principles, that we're going to have to now find some way to fund the continued subsidies of the NFIP. So what we're looking at is an opportunity to implement a Bigger Waters actuarial assessment on the Section 207 and 205s that will be a 20% increase on baseline, that will increase the amount used for funding, that will require that in order to show, have some due process with FEMA, to have a certificate of elevation, to show where you are in terms of the flood zones. We're looking at raising deductibles up to $10,000. We're looking at monthly payments. The bottom line is that the federal government doesn't need to be in the insurance business. And transitioning that is going to take a long time. But in order to engage the private capital to come into this market, we have to give them some sense that there can be a return on their investment, and that sense has to come from an actuarial analysis. And the only game in town on that right now is FEMA. But it also has to be affordable. And the sticker shock politically is going to adversely impact every one of my colleagues, and probably me too with some of my constituents. But we are going to take up a flood insurance plan. We will not take up the Grim Waters bill that was filed as a fix, which is essentially a 4-year delay, that the Senate will probably pass out in the next 2 weeks. We will not take that up in the House. I've been fairly well assured of that. And we will do a fix that hopefully it will actually delay the implementation for a year under the Section 207, the pre-FIRMA, the flood insurance rate mapping, and then slowly allow for a transition of the rates to increase. But the bottom line is, unless we do something that will engage the private market to want to come to play into this, whether we cede at different levels some of the risk or something, we've got to look at some way to get the federal government out of the national flood insurance business. It may not ever happen in my lifetime, or at least maybe not during my tenure in Congress, but I think that we've got the right direction in the House right now to move in that area.
Thank you.
If I could say something, I think this is probably the best example of sort of the interplay between sort of politics and policy. The Bigger Waters Act passed almost unanimously. Yes. I mean, there's just overwhelming support for it. And now, 18 months later, it's, there's a lot of support to almost completely dismantle it.
It has become the focus.
Nothing has changed except, the sticker shock, all of which was entirely foreseeable. People want to talk about the unintended consequences. These aren't unintended consequences. They were not foreseen at the time because people didn't take the time, to think about it. The other thing I think that's interesting about this is as this debate more recently has been in the press, people are coming out and talking about, only 20% of the rates are subsidized, implying that 80% of NFIP rates are adequate. If that were true, there would be a private market for flood insurance. So that is not true. But that's what happens when the government gets involved in it. They go around talking about how that, this you could say the same thing about citizens. Even if you get citizens to where they have what they would consider adequate rates, or, they're not. If they were, there would be a private market for it.
Interestingly, it's become the focus of the Senate campaign in Louisiana. Mary Landrieu, who's the incumbent senator, and Bill Cassidy, who's a colleague of mine running against her, have been fighting each other in trying to address the Bigger Waters impact, and it's become very political, which is also driving what we do now in Congress.
Yeah, that is really a good example in the sense that, one, the United States Senate, everybody knows, looking at the coming election, there's, just doing the math, the Republicans, throw out all the environmental issues, the Republicans have a pretty good chance of taking the Senate. And one of those key Senate races is going to be in Louisiana. And so we have, the chance basically of one Democrat senator losing her seat that is really driving a lot of the Senate activity on this issue.
Yeah, it is.
I mean, there really isn't anything else about it besides that calculation. It's not only, you throw the policy issues out, it's that political issue is really behind a lot of it. The flood insurance program, I mean, and probably this is my well-earned, I have this combination of extreme skepticism and naivete at sometimes. I don't know why everybody's not outraged that the rates were subsidized this much.
Yeah.
I mean, the whole country is paying people that, if the rates are $1,000 a year and the new rate's going to be $7,500 a year, well, where did that come from? Right? And that's what I don't understand. Nobody in Iowa is saying, now wait a minute, where is that money coming from that somebody's house in Florida should be $10,000 a year to insure and it's only $1,200? And that part of the debate is absolutely absent for the most part around the country, and it's kind of astonishing to me that really has played itself out the way it has. But the flood insurance issue, it also, I'll say this, this and we have this long-standing tastes great, less filling debate in our industry about state regulation versus federal regulation and all of the fun that comes with those things, right? That's been going on for decades. I don't care where you sit on the issue. I have members sitting right over there who, are fed up with state regulation and like to have a federal regulator, and other members over there that say the opposite. If we as a property casualty industry, want to learn anything, look at our cousins in the health insurance industry and the flood insurance program to see how a federal regulatory structure would play out. If we don't think do we really want to have a credit scoring debate in the United States Congress?
Yeah.
Seriously?
We'll lose that one.
Or pick your other issue, right? Just pick one that we deal with in the States all the time. I mean, we're kidding ourselves if we think that's going to be better. As bad as the states are at times, as maddening as they are at times, right? I mean, the Congress is worse, and I mean that with, not as you, but I mean as an entity.
Man,
and
feel like I'm at
we
home.
just, if we think the politics of these issues at the state level make us nuts at times, and they do, man, playing it out at the federal level, we would be in a lot worse shape as an industry. There's actually a question.
Yeah, are there going to be any questions? I have a question.
We'll try to save some time for some questions. Thank you. Commissioner, what role should the Florida Hurricane Cat Fund and citizens play in our state, and what can our political leaders do to reduce the exposure in those entities?
Beth, I don't think I'm the best person to answer that question. I spent a lot of time here, love this state, but I don't know, the ins and outs of that well enough. I would just say that, broad observations, Florida is in a kind of a unique, situation, not comparable to, to any other state in terms of, the extent of the exposure. So, there very well could be a justification, for a cat fund, but certainly based on sort of what I read and things I've heard even here, I mean there are challenges associated with that, and it's been strictly by the grace of the hurricane gods that there haven't been any in several years that it wasn't, that you didn't have a real problem. If there had been a major storm in 2008, the state would really be hurting because of the obligations that were taken on. So I think that looking at minimizing the role of it, even if there is a legitimate need for it. It certainly is not, the problem is, I think people have forgotten what residual markets are and what it really means, and that they should be the market of last resort, not first. And, that has to do with rate, it has to do with, the kind of coverage that is involved, the ease of doing business, all of those things. So I guess I believe pretty strongly that you should have sort of less smaller residual markets as opposed to, larger, and that if you create the sort of the right, environment that that private capital, will come into this market.
Congressman, your thoughts on the cat fund and Citizens?
Well, we don't have that much time, but I will tell you, the commissioner's correct about the residual markets, and when we have lost sight of that, and we've made the government the competitor in a monopolistic way. To that end, I also believe that government will always be involved in any insurance or disaster relief plan. And to that extent, I've also sponsored a national catastrophe fund bill that was designed, and some of the purists out there don't like this because it's a government involvement, but it's an admission that government's going to be involved, but to set up the infrastructure in order to engage the private global reinsurance markets to fund a national catastrophe fund that would allow for other states to opt in, and opt in only if they have their own state cat fund and only if they have a mitigation program as well. The purpose of this is to say, look, as much as we want to have, and we see this in TRIA, the Terrorism Reinsurance Act, the government's going to be involved. And say what you may, I think our cat fund in the state of Florida did what it had to do in the way it was designed to do in 04 and 05. Unfortunately, for political reasons, we tried to make it much more than that at the expense of consumers and to drive away more of a market. So the political reality is that I believe cat funds have a role to play. I think it's a minimal role. I think it's more of as a residual market, a market of last resort, but I think it needs to be there in some regards in order to have a market to come in and play. And so, I would like to see Florida change their cat fund and revert back to what I think it was intended to be years ago. But I also believe that on the national level, now that we've seen Hurricane Sandy, now that we've seen tornadoes in Oklahoma, floods and windstorms and earthquakes in California, that natural catastrophes are a national problem, not just a Florida problem.
Yeah, it's interesting. I think this issue for the industry, this is one of those issues where you can have a theoretical discussion, and then, we have this discussion about the topic of this panel, and you get into politics, right? And everything changes. This is a good example of one of those issues I think that changes. Because I think everybody in this, again, it doesn't matter where you sit about specific examples, whether the Florida Cat Fund or a national cat fund, we all could agree that there are events that can happen in this country that are natural disasters that can outstrip the capacity of the private market, right? We can all conceive of events that cost too much money, and the insurance industry just can't cover it all, right? You get some calamity of, a mixture of hurricanes and earthquakes in the same year, and all of a sudden you've got a real problem on your hand. And so we could all probably agree that there is an event that was more than what you could just count up the dollars that the industry could cover. And so you think, okay, well, this is easy. Then why don't we just have something that, whatever that magic number is, right? We just have something that sits on top of that number that helps pay for that. That's the cat fund, right? Or whatever you want to call it. But it's limited. It's small. It's only for this, mega calamity that we all agree could happen and probably would never be used, right? I mean, that'd be the best thing. Then we try to pass a bill. And that's where, well, wait a minute now, we could actually use this thing in Florida to figure out a way to keep rates low, right? And then we're off to the races, and this is where the industry is not going to win this debate. And so I think a lot of what the congressman is talking about, the industry not liking some of this stuff, is kind of grounded in the reality of the notion that if we could just snap our fingers and create a structure that we don't have to go to any policymaker to actually try to pass, we probably would agree to it. Again, at this super level that would sit above the calamity that we could all envision. But the reality of it is it gets changed. It plays the role it plays in Florida. Policymakers use it as a tool for other means, and that's the danger. And that's, unfortunately, the reality that we saw play out here. And it's just too tempting, right, to not do that, it seems like. And again, these issues, to me, it's funny, there's not a Republican or a Democrat. Very rarely. Maybe this one right here in the front row and this one over here. But they are, you could get them all around this table in the country that would agree with these guys on these issues and actually do something about them. There's not a coastal Republican to be found in Texas or South Carolina or New York. They just don't. The politics of it changes, and so that's a really good example of a real problem. I mean, we can do all we want to do about mitigation, and we should as an industry. It's also, mitigation is a great example where the politics leaves, right? Again, nobody runs around running for Congress saying we got to have, more mitigation measures. There are a couple a couple of examples that do that, but these are rare, right? I mean, that's a rare case. Everybody in all these states this ought to be the first thing they talk about, because we can build buildings that'll stay there, but you can't, it's just an issue that most people just don't care that much about. And so we've got to figure out a way to take some of those politics out of some of these issues, but it's very difficult to do. And otherwise, we just kind of limp along, right? We've got this, all agree again on this big problem as a nation of all this development in all these places and no way to pay for it. That's the other reality that we have, and we just want to ignore it and deal with it storm by storm.
I would actually, you mentioned mitigation, and I'll just sort of put in a plug here. This is a place where I think there is a role for government, because the industry, individuals, everyone who knows anything about mitigation, and anyone who's involved in these issues, everyone agrees that mitigation is the closest thing to a solution, to this problem that there is. And the research has been done, the technology is out there, but it is just not being taken up in a big way. It's not being done, on a large scale. And at sort of the current rate of take up, I mean, it could take, 50 to 100 years, to sort of change out, the existing building stock and get it to a level where it really is affording sort of the best kind of protection and a reduction, a meaningful reduction in loss costs. And so it's just not going to have the kind of impact that it has the potential, to have. And so this is one area that I would like to see. I think, local governments, should be very involved in this. Because it's a huge hit to local governments when you have a catastrophe, when you have a hurricane, you lose your tax base. Raw land just does not bring in the kind of tax revenue, that a home does. If people can't work, if they can't get to work, if they don't have a place, to go to work, plus all the cost of rebuilding. So I would like to see something more done by government there. I have a funny sort of, you talk about coastal Republicans, and this is where, I said it's a nonpartisan or a bipartisan issue, who actually likened people who live on the coast. He says, kind of like, people in healthcare with a pre-existing condition.
Mm-hmm. It is. And we subsidize it.
It should be treated like a pre-existing condition.
To the extent of mitigation, of course, I think is absolutely important. But I have to use this as an opportunity to support, talk about my disaster savings account bill. Look, as much as I want to see governments mandate building codes and to require that you build structures that can withstand storms, because we have the science and technology to do that, you're just not going to see that. Oklahoma, as conservative as they are, is not going to put in a building code. But yet they support my efforts in the disaster savings account. We filed the bill initially. We're revising it. We're now going to refile it in about 2 weeks with Senator Inhofe from Oklahoma. It allows for people to set aside $5,000 a year in tax-free amounts to go towards mitigation of their home, whether it be for flood purposes, for windstorm, for earthquakes, for whatever we've defined as being a mitigation expense, and it can roll over year to year to year. So our goal, and it can be used to pay for your deductibles in the event of a disaster, so that you're using tax-free dollars. What we're trying to do is to effectuate a market again to come to the table. I foresee things such as a Lowe's or a Home Depot offering mitigation seminars and setting up how we can put in hip roofs, hurricane shutters, things of this nature, and then finance it for you under a disaster savings account plan. These things are starting to gain some traction, at least in the Republican side of Congress, and I'm hopeful that that we will be able to change the culture, because for every $1 in mitigation we spend, we save $4 in relief, and that's important.
Thank you. I apologize, but we're running a little over time, and so we're not going to have time to take questions. But I hope you would please thank our panelists for this really, really great discussion.
Thank you, Beth. Commissioner, pleasure.
Good to see you.